Hi all, Les from Future FX here. How's it all going? Just going to go through cost averager and just make a comprehensive video on all of its settings as of version 2.4, which as I'm making this video, nobody has yet. But we'll go through all the settings now. Okay, guys, this is the prop account that I've been running my cost averager on. I started this prop account at the start of last week, and it took me so a week and 1 day, and I got my 7% and doubled my account balance. So that got doubled on Monday. So Tuesday I started off with the double balance of $10,000, and so I just made a little bit over 1% since then. But just going to go through the software right from word go and show you what it does and how it works and what the settings are. So it only ever trades with the trend, and it has similar to Trend Trader software, it needs all three time frames, the 15-minute time frame, the 1 hour and the 4 hour, to all be trending in the same direction. When that happens, this writing will turn green. As you can see on this pair, they're not all lined up. There is a trade open here because they were all lined up, so it opened a trade. But since then, the 15-minute time frame has changed. That happens. It's not a problem. It just means that if this trade closes and this one is still a sell, then it won't open up a new initial trade. So you need all three time frames to line up and be green like this for that initial trade to open. Once that initial trade is open, the software will continue to open up more trades to cost average into position as needed. But once, sorry, just had a spam phone call coming through. Yeah, so you just need those timeframes to line up for the initial trade. After that, the software will open up more trades to cost average into position as needed. And once they close out for the predetermined profit, if the trends are still lined up, it will then open up a new trade. If not, it will wait until they are. What else is displayed on the screen here? It will say the correct time or not correct time. There are some time parameter settings in here, similar to Volatility Master. So you can set what times of the day you want the software to work. And each to their own, you can trade it how you like, but I tend to just trade mostly just the Asian session to avoid any excessive volatility and to avoid most of the big changes in direction with the market. I'll show you what settings I use and exactly why when we get into the settings. So that's what the correct time will be there. Target. So we set, and this is a major feature to this software, or well, at least a major feature to the way I use the software. So you just set a target goal. And so I've set a target, and I set this target this morning of $10,150. Okay, so that because this morning this was just on $100. So $50 is my target. Once I make that, the software is going to close any open trades and stop trading. It'll stop trading until I change that goal. Now, the reason I've just set that $50 is 0.5% of my $10,000 account, and I'm more than happy with 0.5% per day. 5 days a week, that'll give me 2.5% per week, and that would mean I'm doubling my prop account balance every 2.5 weeks or so. And so what the target is displaying is how much more. So then it works off the equity. So the equity needs to go up another $47, $48 in order to hit my target. Once that target gets hit, it will come up in red writing underneath it. It will say target hit. And when that happens, my account balance will be $10,150. give or take a few cents, usually take a few cents. And underneath here, we have the average daily ranges. So ADR, so that's average daily range over the last 20 days, has been 244.87 pips. That simply means that the average movement in the market every day is 244 pips. So this is on gold. So every day for the last 20 days, the market has moved an average of 244 pips per day. Highest daily range over the same period simply means the average was 244, but the highest of those last 20 days, the market did move 354 pips. And so far today, the market's moved 67 pips. So that's all the actual displays on the chart once you have the software attached. It's like any other, let me just expand this up a bit. So it's like any other software, you have the software name and the smiley face there. Now, what do I use the average daily ranges for? At the moment, they are only a display. They aren't integrated with any of the software's features, so the software is not going to do anything different based off this. It most likely will at some stage in the future, in future versions, but at the moment, it's just a very valuable piece of information for us to know about each particular pair in order to help us enter the correct settings. So as you can see, on gold against the US dollar, the average daily range is 244. On pound USD, it's only $94. You know, so a lot less. And over here on pound, euro pound, it's only 41. So the average movement on this pair is only 41 pips per day. So a lot less volatile, so to speak, than gold. So what I use that for is mostly determining the distance I want between each trade. At the moment, I only have one trade on each pair. But as the market, so this is a sell order, as the market moves against me, it's going to open up another trade and another trade and another trade. And then once that group of trades, once the market turns and comes back in the right direction, once that group of trades has a combined profit, and that profit is a setting that you can change, then it will close all of those trades out at the same time for a group profit. Now, some of those trades will be closed in a loss, some in a profit, but the net result of all of those trades will be equal to that preset profit target that you enter in the settings. Now, the distance between these trades, we just call the trade gap. And the more volatile that pair is, so the bigger the average daily range is, the bigger you most likely want to have your trade gap. So, for example, on gold, the most volatile of these three pairs, I have my trade gap set at 300. That's actually 300 points, so 30 pips. Whereas over here on euro pound, the least volatile of these three pairs, I only have a trade gap of 100. So I only have a trade gap a third of what I have on gold. Okay, so that's just roughly a very basic but easy and valuable way you can use the average daily range to influence what settings you want to use. But now I'll open up the settings and I'll go through exactly what all the different settings are for. The profit target, as I said, I had that set at 10,150. Obviously, you'll set that depending on how much you want your target to be and how much your account balance is. But I think you can see how, you just set a target. I wanted to make $50 today, so I set it 50 more than my account balance was this morning. And when the equity gets to that value, it'll close all open trades and stop trading. Input max trades. So I've got the default setting of 6, which means that the software on each pair can open up to 6 trades on any one pair to cost average into position. It has a trailing stop loss feature. Now, that's just like any manual trailing stop loss you would enter, and it's going to trail along at 200 points behind current market value. So once one of the trades gets into 200 points of profit, the stop loss is going to the trailing stop loss will activate, and it will trail along 200 points behind the market value. If you don't want to use the trailing stop loss feature, just leave this set at 0 and it won't be used. But you can also set what level you want the trailing stop loss to work on. So I have mine set at 3. So that means the first 2 trades won't have a trailing stop loss feature. It'll only work on the 3rd trade, 4th trade, 5th trade, and 6th trade. That's just the way I personally like to use it at the moment. You can set that at 0 if you like. So, and then it'll be the trailing stop loss will work on every single trade. I just have mine set to start on the 3rd trade of each pair. Input trade gap, we talked about that. That's in points, and that's how far apart each of the cost averaging trades will be on each pair. And that's the trade gap in points. You can also set the trade gap in dollars. So, for example, let's just look at this one here, the trade gap of 100 points. Anyone that's trading will understand what a point is or a pip is. But you can also set it as a dollar value. Now, 100 points on this particular pair would equate to $0.001. So it'll be 1/10 of a cent in the dollar value here. Why do I have that option? One, when I first created the software, that was the easiest way to initially have it working. Just while I was creating it and testing it out. Then I put in a conversion there so that we can just enter it in points, because that's something that most people understand a lot better. But I did leave the trade gap in dollars there, because there is the chance, particularly with certain indices and cryptos, and even then it will only be on some brokers, not very many. You may come across a situation where the points really don't, setting it as points really doesn't work. I've come across that. I believe it was on an Envy account with US Tech, as they call it. What's it called in there? It's called the US 100. NAS 100. That's what I was trying to think of. NAS 100 on Envy. When I tried to enter it as points, it was making it obviously way too close. So I do, and that's just because just the odd broker does some really strange calculations that I really don't understand with their pips. So you're never going to have an issue using points on Forex pairs. If you're going to trade something other than Forex pairs, just test it out on your particular broker first and make sure that it's working okay. If you're having an issue, you can enter the trade gap as dollars. So that's just there to use, and most likely it'll only be used if you're having an issue with one particular broker on indices or something. But most of the time, you just leave it on the default of 0. If it's on 0, then the software won't even look at it. It will only, use the trade gap in points for its calculations. We have a trade gap multiplier. So instead of every single trade being just 100 points apart, you can add a multiplier here so that the trades get slowly further and further apart. And that's very handy in case the market moves against you. it means the market can move against you a lot further and incur a lot less drawdown than if you only had the, every trade exactly 100 pips apart. And we also, a little bit like the trailing stop loss, we have a gap multiplier start level. And I have this on 3. So the first 3 trades are only going to be 100 pips apart. And then after that, it's going to go up to multiplication of 1.1. So be 100 pips apart, 100 pips apart, and then the next one will be 100 points apart, 100 points apart, and then the fourth trade will be 110 points away from the third trade. You can set that at any level you like. You can have it set at 0 or 1, so it increases on every single trade. I just like to keep my first few trades close together. And then because the way I use the software, I rarely have more than 3 trades opened anyway. Input minimum profit. So for every trade or every set of trades per pair, I'm only aiming for $10 of profit. So that would have to happen 10 times for me to make $100, which would be 1% of my account. Now, you do need to understand this software is a high volume trader, so it takes out a lot of trades, compared to something like Trend Trader. But it's designed to only aim for small profit. And so I'm aiming for $10 profit per trade or per trade group. So if it opens up 1 trade, it's going to close when it gets into $10 of profit. If it opens up 3 trades, it's going to close all 3 when, as a group, those 3 are in $10 of profit. Now, that $10 is based off me using a lot size of 0.1. The ratio between these is fairly important. You don't want to change it too much. So if you were using a much smaller lot size, say you were using the minimum lot size of 0.01, so, you're dividing this by 10, then you basically need to divide this one by 10 as well. So if you're using the minimum lot size of 0.01, then you should only be aiming for a minimum profit of $1 per trade or trade group. You can aim for a little bit more, you can aim for a little bit less, but I've always found either this or a little bit less is the sweet spot for this software. Now, input max loss. This is in dollars, and make sure it's a negative value. That way, if that trade or that trade group gets into more than minus $500 worth of combined profit, so it's in $500 of drawdown, then it's going to close out that group of trades and you'll take that loss. So that is your equity protection feature. And that works off just each individual pair. So this pair is set at $500, which is 5% of my account. I don't really ever use a equity protection higher than that, sometimes even less. Use correctly, and by correctly I mean without getting greedy, with a conservative lot size and avoiding volatile times in the market, you can definitely get away with less than a 5% equity protection. So that's what that's for. If you don't put the negative sign in and you just made it 500, then it's not going to work. And that'll be you operating without an equity protection. I just put that little safety in there so that if you accidentally didn't put the negative sign in, it's just not going to work. Otherwise, if you put in $500, then it's going to automatically close your trades all the time because they're in less than $500 of profit. So as long as, if you don't put the negative sign, it won't work. So it'll be like you don't have an equity protection setting. So that's all you need to understand. You need to have the minus sign in there, and then an equity protection in dollars, depending on how much you want to risk, how big your account balance is, et cetera, et cetera. Now, the magic number, like any PA, it's really not important. It's just how the software identifies which trades it's personally taken out, as opposed to trades from another software or a manual trade. You can change that number if you like. It won't interfere with the software. It'll just use that changed number to identify its own trades. Trade comment just says cost averager. So you'll see in the comment section here of each trade, it says cost averager. So you'll personally know that this is a trade that cost averager has taken out. Input volume, that's just the lot size. We talked about that. That'll be dependent on, how aggressive you want to trade, what your actual account balance is, etc. Now, this is a new feature that only this version has. So nobody's using this version except for me at the moment, a volume multiplier. So if you want to, how the trade gap opens up 1, 2, 3, 4, up to 6 trades to cost average into position. If you have the volume multiplier set at 1, then every single trade will be the same size of 0.1. And that's the way this software has always worked. Now, I wasn't going to put a multiplier in here because then it's really making this a martingale strategy. But when I did play around with it, I did find that this can make a significant improvement to the results. So I have added it. But I do want to caution that if you're not using this software correctly or you're using too high of a multiplier here, then it's going to greatly increase your risk. As you can see, I only have my gap multiplier at 1.1 and then my volume multiplier at 1.1. So it's only slightly increasing it. It'll make this one 0.1. The next trade would be 0.11, 0.12. It's only getting slightly smaller. If you're going to use a volume multiplier, this is just a FYI, a bit of a warning. If you're using a lot size of 0.01, so the smallest lot size, and you use anything other than a 1 multiplier, then your first trade will be 0.01, your second trade will be 0.02, 0.03, so they're going to increase. So the second trade will end up being twice the size of the first one. And that's simply if you're already using the minimum lot size. For me, using 0.1, it would just be, increasing the size of the trade by a tenth every time. So used correctly, this can definitely improve results. But if you get caught in movement against you and it goes too far against you, you will end up in, well, if you're allowing the software to take out larger and larger trades, you will always risk a lot more drawdown. But as long as you keep that quite a small multiplier and you're avoiding times of extra volatility, and that's basically avoiding London, New York, and every red folder event, then it definitely helps. You can close out a lot more $10 profits in a day using that. And then you've got a start level for the volume multiplier. So I've just got mine starting straight away. So my first trade will be the input lot size. Second trade will be 1.1 times that. You can use it like the trailing stop loss, and you can set it, to start at later levels if you like. Maximum spread allowed, that's like any spread filter. 30 will be enough for basically all Forex pairs, except maybe some of the exotics. Depending on your, I just usually leave it at 30 for all my Forex pairs, which is a default. Some pairs, depending on your broker, like Euro USD, at the moment, it only has a spread of 2. Okay, so you could use a much smaller maximum spread setting as well if you wanted to on some of the pairs. Why would you want to use or what is a spread filter for to start with? It's to stop the software taking out any trades if the spread is excessive. And that's simply because if the spread's excessive, the market's going to have to move a lot more in order for that trade to get into profit and to hit the minimum profit target. Now, pound yen, it currently has a spread of 17. Of a morning time, and this will vary between brokers too, but of a morning when the market first opens, the spread on pound yen, it can often be like 70 or 100, even more sometimes, which will mean so when you open up a trade on pound yen, the market needs to move 17 points in order for it to get to break even. If there is a 100-point spread, the market's going to have to move 100 points just to get to break even. So excessive spread simply sucks all the profit out of a trade. And so it's a lot of the time, especially when market first opens, it's pointless taking out a trade because the spread's just excessive. So this will just filter out, times of increased volatility. So the software for like on most pairs with a setting of 30, the software is simply not going to take out any trades for that first hour of the market open, because that first hour, the market spread is almost always going to be over 30. On indices, gold, sometimes on gold, depending on your broker, and crypto type pairs, the spread of 30 won't be enough. This is well, let's have a look. On Bitcoin, I've got, it's fluctuating a fair bit. Between 90 and 130 points is just the norm. And this is on a LaCroix FX broker. So that's what that one is normally. So your spread needs to be higher than that. And I think I'm running a 200-point spread on my settings for Bitcoin. Gold's fine on this broker. On some brokers, it will be higher though. If we get, let's just let me move down here so we can check out. So this is NAS 100. It's got a spread of 200. And this is DJ 30. That's UF 30 on this broker. It's got 350. That's just normal. So you need to run higher than that. I think I run about a 400 spread on UF 30. Anyway, that's what the spread filter's for and how it works. The next 4 settings is the time parameters, the time filter, whatever you want to call it. And so these are the default settings and mostly what I start with. Sometimes I do vary it, but this is a good starting point. It's going to start, and these times are based off market watch times. So it will be the same for everyone. You don't need to worry about what time zone you're in or anything. Now, so it's going to start at 22 hours and 0 minutes. So that's 2200 hours is when the software is allowed to start taking out trades. And so that's exactly 2 hours before the market opens, or that's 2 hours before the market closes each day, which is also the same time the market opens each day on Forex pairs. So there'll be 2 hours at the end of every day it'll trade, and it'll trade those 2 hours, and then it'll trade all the way through until 1000 hours the next day. So that'll be, that's 12 hours worth of trading. Between 1000 hours and 2200 hours, so for the next 12 hours, no matter what happens, the software won't be able to take out any initial trades. Okay, if there's already an initial trade open, it can take out the extra levels, the cost averaging positions, but once they close, once a set of trades closes, if you're in that 12 hours between opening and closing period, it won't open any new initial trades or any trades at all. But just remember, if there is an initial trade already open and it gets past 1000 hours, it will still be able to open up those extra cost average positions. So on that note, and these are basically the settings I like to use all the time, I like to make sure manually that all my trades are closed not too long after this, before, within an hour or two after this time. I like to make sure they're all closed. So I will sometimes change my minimum profit to zero. So as soon as it's break even, it will close out all those trades. Or, I'll have a bit of a manual input in there and see what I think about it all, and try and make sure manually that all trades are closed. That's simply because I don't want to have any trades open during the majority of the London and New York session, which is when there's more volatility, and it's also when most red folder news events occur, and I want to avoid them. Sometimes you can't. Sometimes you get in movement against you, but as long as you're sticking with conservative-ish at least, as long as you're not being too aggressive, then the market can handle some pretty serious movements against you. And that's also where the average daily ranges and the highest daily range comes into play. You want your settings to be able to handle these bigger days of movement. If you're using settings where, let's say on this pair, if you're using settings that can only handle 40 pips of movement before you get into too much drawdown, then you're trading very aggressively, which is fine, but as long as you understand that that would be very aggressive, and then it would be vital that you get out of the market no later than this. Personally, my settings allow me to, I haven't actually worked it out, I do have a calculator for that, but these settings for me on Euro Pound would allow me to have at least 150 pips of movement before I incurred 5% drawdown, hit my equity protection. And 150 pips is basically twice the highest movement, the largest movement that this pair has had in the last 20 days. So that is keeping it conservative. Even if it's twice as much movement as the highest day we've had in 20 days, I would still handle that on these settings. So that's another way you want to use these ADRs and HDRs in order to do it. So that's it. That's all the settings. I generally don't use the minutes myself, but you can fine tune it more and add the minutes in there as well. Other than that, you can just set the ADR days. So I've got it set at 20. That's why it's 20 there. If I wanted to see what you can change these settings whenever you want. So the highest daily range in the last 20 days was 73.2 pips. Let's see what the highest daily range in the last 2 months, in the last 60 days was. I'll wait for this to update. 60. So if you go back 2 months, then the highest daily range was 112 instead of 72. So you can jump around and see how often you get really big days of movement, but the average daily range is still only 43 over 60 days. So not a very volatile pair. And that, ladies and gentlemen, are all of the settings. In the common tab, though, like any EA, you just need to have allow live trading checked. You don't have to worry about DLL imports or anything like that. And the other thing that a lot of people, even people with a lot of EA experience, automated software experience, haven't really realised yet, is that in the common tab, you have this option on every single EA. So you can set it. It's by default, it's set to allow you to do long and shorts. So you can do buy and sell orders. The software can take out buys and sells whenever it needs to. You can just set it to only do shorts, only do sells. So you might do a little bit of a technical analysis on a chart yourself, and let's say this was all lined up to do sells, but you had a look at a higher time frame and you can see that it's getting close to strong support. You might just want to set this, and because it's getting close to support, you don't want it to be doing too many sell orders. because you think the market's likely to bounce and start going up. But the software is not going to do buys because all the trends are still lined up as sell, but you might feel that the sell trend isn't going to last much longer. So you could come in here and you could set it to longs only. And then even though even though the EA is looking at this and thinking it needs to do sells, it won't be able to because you've disabled sells. But as soon as the market bounces off that support that you're looking at and all 3 timeframes start to trend up, then it will start doing buy positions. Now, I personally don't bother with that too much because I'm usually in a position to monitor my trading and I can, turn this pair on and off manually whenever I like. But if you wanted it more hands-free, you wanted this pair turned on because once it starts going up, you want it to be trading. That's just one way you can do it. And even if you don't use that on cost averager, this features on every single EA, and on other EAs, you might find good uses for that as well. So I just wanted to mention it. In the About section, that's where you'll be able to find the version number. Now, this is my own personal version of cost average. It's just a developer version. So that's just so I don't need to, I forgot to mention that. Your version up the top will have where you need to enter your activation key. Okay, and that's the activation key that I'll give you when you purchase the software, or if you're using a free trial or something, I will give you an activation key, and that needs to be pasted in there. Otherwise, the software won't even stay on the chart. My version doesn't need that because it's mine. So this version I'm talking about, though, it was Future FX Cost Averager, version 2.40. Next time I always update my softwares and put in a lot of new features from time to time. I mean, what we've got here works exceedingly well, but in the future I will add more features and I'll come out with a new updated version. New updated versions are free for anybody that's in my paid community. Otherwise, you can purchase an upgrade for just $50 anytime you like, but it only costs $50 to be in the community for a month anyway. So you're better off just joining the community, getting access to the community, and through the community, you'll get discounts on the other products as well. There's some products that are only for community members and are free, like trade managers and things. You'll get more access to me and other community members, and that's where we communicate with each other. So you'll see in more detail exactly what settings we're using from time to time, different strategies that other people and myself are using the software. So there's a good value to be in the community, but it's not compulsory. Just thought I would mention it here. If you've purchased the software and you're not in the community, that doesn't mean you don't have access to me. You can still message me anytime you like, and I'm more than happy to help out. It's just you'll get more interaction and access to more people that are using the software through the community. Okay, that's pretty much it for cost average, you guys. I do personally change which pairs I'm trading every single day. Well, maybe not every single day, but I do evaluate which pairs I want to trade. So when the market opens, I'll have a look at which pairs are if I just want to give you a quick example. And if you've seen some back testing results that I've done on it, that'll be just one pair back tested over a certain period of time. And some days, sometimes for several days in a row, the trends won't be lined up. So for those 2 or 3 days where the trends aren't lined up, the software won't take out any trades. So that reduces the actual profit that you will see in back testing, because in actual practice, if this pair isn't lined up, I won't even trade it that day. I'll trade this pair instead. Some days, there'll be a dozen different pairs that are all lined up. and then I'll probably look at some higher time frames and try and see for myself which pairs are in the best position to trade. Generally, that's something that's trending strongly and isn't getting close to support or resistance. So, that's what I do. I'll start up of a morning. I'll pick one or two pairs to trade. Sometimes I'll add a third pair as well, and I'll let it do its thing. I always set a profit target, a nice conservative profit target, usually just 0.5%. Sometimes if I hit that target really quickly and easily, I will get greedy. And I know I've already warned you not to get greedy, but sometimes I'm human, I get greedy, and I will just start up another pair. I'll increase the goal or do a little bit more trading on one, but only if that's usually only if I sit down and I've got time to monitor it and that as well. But long term, if you can hit your 0.5% target just during the Asian session and get out of the market completely until the next day, that's prime, mate. That's awesome. You'll be making your 2.5% per day. In this particular instance, on this prop account firm, I'll be doubling my account every 3.5 weeks. That's fantastic. If you can average that, the world's your oyster. It's only a matter of time until you're rich. It's just like any other trading, though. It's that greed that will get you. So try not to get greedy too often. All right, guys, I'm going to leave that to you there for now, and I will talk to you later.